The broadcast is now starting. All attendees are in listen-only mode.
So I think we had some sound problems. I think that you can hear me now. Welcome again, Admiral Markets webinar of 3rd of April 2014. Today, me and Chris Warzik will present you Basic Forex Strategies Part 2. And today, as always, we will talk about new great strategies which have been tested, especially for new traders who are new to trading and who may not know so much about advanced strategies, and these strategies will help them to overcome that fear of trading and to actually gain some profit, because some of those strategies have been tested and are actually very cool to trade. So here we are again, me and Chris today with you. Prior to webinar presentation, of course, risk disclaimer. Online educational materials are developed by Admiral Markets Estonia for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, risk disclosure statement stating all possible risks associated with Forex market. And by accepting it, you are also accepting to proceed further with us. And of course, the final part of risk disclaimer: Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author. It's me and Chris in this case, and in no way it represents the actual suggestion for the trade. These are not AM UK's opinions, and the website in the video is not the .co UK website, but the globalnews.com website. Forex is risky business, and this is a personal opinion only, and this webinar is for informational and educational purposes only. With that said, of course, as always, basic strategies start with how novice traders should trade, different dimensions in trading, and Basic Forex Strategy M30 EMA 50 system. That will be the case today, M30 EMA 50 system. So novice traders should start first on demo account practicing their chosen strategy. So the first thing the novice traders need to know is they need to basically know what they are gonna trade. When you, as a novice trader, choose a dimension, then you need to try trading a system which is connected to that particular dimension. There are different dimensions in trading. You already know about it. Those different dimensions of trading are basically price action, I will show you that later, indicator-based strategies, rank or range bars, point and figure, and many different. You can, of course, practice and change systems until you are profitable with one strategy. And of course, do not search for Holy Grail, because Holy Grail is always, I always state that Holy Grail is within you, and Holy Grail is basically you, yourself, and your trading psychology. That is your Holy Grail. Novice traders should concentrate on euro, dollar to grab a feeling for market and gradually move to other currency pair trading. All novice traders should make a plan once they grab the basics. And we will show you different dimensions and different systems that are suitable for novice trading. What are dimensions for trading? Price action indicator combo, indicator-based systems, chaos, harmonic patterns, range, Renko bars, point, and figure. For novice traders, indicator-based systems are probably the best option, and novice traders should also concentrate more on higher time frames or scalping if they have the time. Today I have chosen a strategy which is done on M30 time frame. So basically it's a sort of intraday scalp swing strategy. It utilizes M30 time frame. You can trade 4 of these pairs, but I suggest, of course, for novice traders, I suggest trading euro-dollar. You can also trade cable, you can also trade dollar Swissy and Australian dollar, but I recommend normally to trade first euro-dollar. It's indicator-based strategy, and this is what this strategy uses. EMA 50, pivot points, MACD 879 settings, RSI 14, and those are indicators which this strategy will use. It's pretty straightforward. It's I can say it's not hard to learn. It's easy one. Once you get a grasp of these indicators, you just put them on your chart, save a template, and you're ready to go. So for long entry, I will also show you later on live charts. For long entry, price should be above 50 EMA. MACD histogram should be, of course, this is mistake. It's above 0. I will correct this. This is above 0. RSI should be above 50. Let's save it. And here, RSI should be above 50. So it's pretty straightforward. But for this kind of strategy, you need a pivot point indicator. I think all of these indicators can be found on MT4 by default. But this pivot point, if you're interested in this strategy, you will email me and I will send you a pivot point for this strategy. You know my email, tarantulafx@gmail.com, and I can send you a pivot point which I use when I tested this strategy. Those are pivot points, basically, no, they are not hourly pivot points, because hourly pivot points are used on M5 and this is M30, so these pivot points are daily, standard pivot points, but you will see they're a bit of interesting because they print the lines as dynamic indicators do. So basically we only use pivot points or hourly pivot points on M5. We don't use it on M30. On M30 you use daily pivot points. Because M30 is a middle time frame, usually profit taking occurs on M30. Usually traders either take profit or open new positions on M30. So basically M30 is a sort of mid time frame, mid intraday time frame. Straightforward strategy, as I say, target is near resistance, entry is above support line or broken resistance line. You will see that also. Short entry, the price should be below 50 EMA. Primary EMAs are dynamic support resistance levels in this system. MACD histogram should be below the 0 line. RSI should be below 50 line. Entry is below resistance or a broken support line. Stop loss is above the closest or next resistance line, and target is the nearest support line. Basically, this is what this strategy does. It utilizes a help of RSI and MACD to determine, to filter a possible bad trade, and usually it's the first trade is done by the break of a pivot point. So in this example, as you can see, this is pivot point. You see this horizontal pink line. This pink line has been broken from here, and the signal was here. So this was the signal. Once the price went above this pivot point moved here. So this is basically dynamic support and resistance pivot point indicator. It works on MT 625 build. I can say that 625 build is excellent. I am very happy with it. Execution times are great. Also, I can say that not just execution times, but I can say that I don't have any problems with being stuck on the platform. That platform is restarting or it freezes. Really, 625 build also solved many of indicator and expert advisor problem which didn't work on 610 and 600 build. So 625 is the best build since inception of 600 build. So again, let's back to this strategy. This is long entry because we have RSI above 50, we have MACD histogram above zero line. This is standard MACD, all MACD. This strategy doesn't use MACD to line, it uses MTF4 default MACD, and EMA is applied to close. Always, usually when we do system presentations, if we don't say specifically that EMA is applied to other than close, then by default it's close, so we apply to close. Also, you can see it here. Basically, what this is euro dollar today, yesterday, M30 time frame. You can see the break was here, signal was there, and the first target has been hit. Stop loss is pretty low on this strategy. Also, short entry, once the price goes above 50 EMA, you need to wait for the price to break pivot point as shown here. So this pivot point has been broken. Also, the price has gone through 50 EMA from above to below 50 EMA, RSI below 50, MACD below 0, and this was a signal line. This was a signal entry, and you see the profit has been done. Camarilla 8 needs to be loaded to remove it. No, it works on 625. On 625, I can confirm that Camarilla works because all of my analysis, which I've been presenting you, are done on Camarilla MACD. So this is, you see the picture, okay? This is done on Camarilla MACD, so it's 625 build, and it's working perfectly on 625, okay? I don't know if it doesn't work for you, what you can do, but basically, okay. The slide has not advanced from pairs to trade. Do you see this? Can you confirm that you see an example of this trading system? Because I'm showing you, it should show you this is short entry, and yeah, this is okay. Do you see the slide? Entry long and entry short. MJ says he doesn't see entry long and entry short. Do you see? Okay, now yes, everyone sees. Probably it's because of your computer. Check your connection, check your PC, or if you need to restart it, then do it, because it is showing the right slide. Yeah, MJ, try to restart the platform. Also, Mile is telling me that he can't see nothing because he can only see a starting screen. I don't know how, but I've got a confirmation from majority that you can see, basically, that you can see this entry long and entry short. Yeah, entry rules. Okay, these are indicators which are used. Okay, do you see now pairs to trade, euro, dollar, cable, dollar, Swissie, time frame, M30 slide? Do you see M30 EMA 50 system slide? Just confirm if you see, if it's okay. M30 EMA 50 system slide. Here, upper right corner. Yeah, it's okay. I don't know, Mila, you should restart your platform, I think. I think you should restart it. Probably It's up to your PC because, yeah, no problem. So pairs to trade: euro dollar, cable, dollar Swissy, Australian dollar, M30 time frame, indicator based strategy, and you see indicators. 50 pivot points. I can mail you pivot point indicator if you don't have it. 879 MACD settings, RSI 14. Long entry, the price should be above 50. MACD histogram should be above 0. RSI should be above 50. Entry is above support line or broken resistance line. Target is near next resistance. Short entry, the price should be below 50 MA. MACD histogram should be below 0 line. RSI should be below 50 line. Entry is below resistance or a broken support line. Stop loss is above the closest next resistance line, and target is near support line. And this is the slide. You see, this is the slide: entry long and entry short. So profits are usually taken here around those levels. Okay. And you need to filter bad trades. Here you can see the filter applied. RSI actually was above 50, but MACD histogram was not above 0 line, so this trade has been filtered pretty fine. Now I will open my chart, and I will show you now here what basically the system consists of. No problem, Mila, no problem at all. Usually, if your screen is stuck or something, there you need usually to restart your platform and basically to connect to the webinar presentation again. Indicators: moving average 50, exponential close. Pivot points: you will get this indicator if you send an email to me. RSI at 50 level to existing 30-70 level. And MACD indicator parameters 879. Okay, you apply it to your charts, then you save template. You know how to do that. Templates, save as. Okay, and you save your template. You can see how the price, this pivot point shows a history of pivot points, and it really is very nice in showing a history of pivot points. Usually this system works quite fine when there is a trend. You can backflip your chart to test it. Actually, you can see some of those trades the system makes. This system does not work quite good in ranging market. So when you see that EMA is going sideways, you don't actually, if you are in a trade, close it in a little bit of profit and then wait till EMA has an angle. So we want also to see an angle of EMA. So you can see here EMA is going to the downside, and that is a signal also that the trend is short. So avoid trading this method is EMA is going sideways like this. I will also state that here in system presentation. I will write it down for your information. Avoid trading when EMA slope, or let's say EMA direction, is sideways. Okay, avoid trading, guys. So in this example we can see that EMA is going sideways, and you should avoid that. In these examples you can see that EMA started to go down, and in this example here it's a short entry. Here you can see it's sideways until here. In this example it's down. In this example it's long. So always try to aim the entry as close as to broken support and then to the upside. So it's a very, very, how can I say, easy system to trade, and it actually you can trade it on multiple pairs, not just euro dollar, but you can trade it also on other pairs such as GBP dollar, dollar Swissy, and Australian dollar. So let's use cable. You can see it works quite fine in strong trends. This is perfect example of a trade. You see that in this point the slope started to go down, and at this point you could have shorted it. Also here, you can see that the slope of EMA is going down, 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 and in this point here, you can see it here, pivot point has been broken, EMA. This is the perfect entry, by the way. So when you have EMA like this, you see it's broken. The history of EMA is going downside. This is also a little bit of slope to the downside. You can see it here. It's downside here. This price has broken through this pivot point, and this is RSI below 50, and you can see it here. Also confirmation of the trade, MACD below zero line. A little bit of drawdown, place stop loss here, and drive it down to the next pivot point. Okay, so nice filtered also out entries. You can see it here. Here also the rejection. You see the pivot point, EMA is above 50. It went down, then it closed up, so the entry could be taken also here to the long side. So pretty straightforward system. And if you're interested in the system and you need this pivot point indicator because it's hard to do with other pivot points, you can just email me on my mail, tarantulafx@gmail.com, and I will send you this pivot point. So once again, you go long when when you see that EMA is going long, not sideways, that RSI above 50 and MACD is above zero line, or you can also go long when you see that like this candle went below, then closed above 50 EMA and pivot point with RSI above 50 and MACD above zero line. For going short, you need to see the EMA slope going down. Then you need to see, as in this example, you can see a price above 50 EMA but close below 50 EMA. Also shooting star. You can use candlestick patterns because this is perfect example of shooting star. You see this candle went up, but it was closed below 50 EMA, RSI below, MACD below, and we go down. Also, you can see it here, a perfect long entry here. You can see the slope of EMA going down, the price above EMA above this, also support, and straight to the next support. Here again, EMA going down, this price, you can also short it here for a next swing to the downside. So basically, wise traders also should use this strategy to get a grasp of EMAs of trading, and also to make some profits if they're not ready, of course, for some advanced strategies. Now I will hand over microphone and presentation to my colleague Chris, and he will do his part. So guys, use this mail if you want me to email this indicator for you. Thank you for listening. We will be doing this different system presentation each time, me and Chris together. So thank you for listening, and talk to you very soon. Chris, you can continue.
Thank you, T.
You're welcome, mate.
Yep. Thank you so much. Let's take a look at my screen. There it is. Alrighty, folks. So basically, this is the audios D. I'm going to share with you a system that where you are actually probably aware of when you're looking at the live trading room. We're looking at moving averages. T was already talking about moving averages and pivot points, which is a good combination. We've been looking at that, in fact, a couple of times recently, and we've been focusing on moving averages, I would say, the last 2 weeks. So I think that's a good combination. What we have here basically are 5 moving averages, fractals, and the AO. The AO is the awesome oscillator, which you can find by going to Insert, Indicators, Bill Williams, and you'll find the awesome oscillator. It's a oscillator. It shows the strength of a certain move or the lack of strength of a certain move. It also shows, for instance, how far price has gone, and if there's divergence between the tops or bottoms, and whether the retracement has already been fulfilled by going back to the zero line. Those are just a couple of things that this is useful for. All right, so actually give me 1 second. I just realized that okay, I'll have to do without drawing tool somehow. Doesn't matter. So I don't have a drawing tool at the moment, but basically that's the AO. That's just an oscillator for extra information. I always have that. It could be useful in this strategy. It's not vital though. The other things are fractals. You can find that as well by going to Insert Indicators, Bill Williams, and Fractals. And you can find moving averages by going to moving average, indicators moving average, or indicators trend moving average. This is a special indicator that has a slope to it. So if you would like to see, if you don't have that, then you'll have to send me an email. Which is pretty handy because you can see if it's an upslope or downslope. The values of these EMAs, there are 5 of them. There's 136, close, high, and low. So I'll write that down. And we have a 21 and 34 EMA close. So 5. Now the reason or goal behind it is that basically the 136 band is used as a trend definition. It's used as a guideline of what the trend is. The reason for 21 and 34 is more to capture momentum. So whereas the band is actually a trend, the shorter ones are actually like a momentum trap. They're actually an indication of what the momentum is. Because they're so close to each other, when they're gapping, that means actually there's a lot of momentum. Because the 21 and 34 are relatively close in their values as EMAs, actually because when they're then spreading away from each other, moving away from each other, there's actually momentum coming into the market. When they're going to each other, the momentum is dying down, or we're having a retracement. That's the concept behind this setup here. Momentum and trend. And we want to trade with the trend and with the momentum. So that's the idea. Okay, so when we have green momentum and we have blue trend, that means both are bullish. When we have red and red, both are bearish. That's the idea. You can use basically this setup on all time frames. It's not so that I would say it's a universal time frame that is valid. So it depends on what time frame you want to trade it, or what you actually can trade, how you want to use this. I mind you though, if you use it lower than an hour, then you are indeed more subjective to maybe the movement price can make within an intraday, and then pivot points do become a bit more important. But even on a 15-minute chart, it has its values. Let's take a look at when we have this uptrend here. This is AUD/USD once again. What we're waiting for is price obviously to be first above the trending indicator, right, which is the band, the blue band. So when price is above it, what we're looking for is a price basically to go back to the momentum bars. And when we get a bounce off those momentum, not bars, sorry, the momentum bands, right? When we get a price at those momentum bands, we could look for the next break. That's the conservative entry. The break of the next fractal would be this one here, with stop loss below the bottom here. And we'll be trail stopping that particular trade either by 50-minute fractals, or if you want a parabolic, if you feel a bit uneasy using fractals, because sometimes fractals take some time, as you can see, to develop. So this is basically the first fractal break. In this case, you can see we would have taken this break here, and the stop loss is quite wide in this case, and you would have gotten still trail stopped out here. What is trail stop, by the way? It's 6 pips. Now you're going to take smaller beatings here sometimes because, for instance, here it was a small loss. This was a weekend gap, so it wouldn't count. Next one is here, and you can see that this went for a nice runner all the way up to here, I believe. Let me check if that's 6 pips difference. Actually, that's 5 pips difference, so still would have continued, would have gone up all the way to here, whereas the entry is here, and the stop loss is just a couple of pips below the opposite fractal. This was a nice one. Now, not all of these are going to be just as nice. Definitely not on the 50-minute chart. You're going to have a lot of choppiness as well on the 50-minute chart, and that's something that we'll have to avoid. That's why looking at the AO could be an optimization, because if you have a deep move back to or below the zero line, the currency has really reloaded itself in a way, especially if you go a decent amount below the zero line. So these dips here primarily are, a bit more interesting within this upside. So let's continue to explain what we're looking for. And visually, of course, we can see as soon as this starts to pull away, prices moving away, the gap between the 21 and 34 is increasing, and that's good for our trade. Okay, so here we have another breakout. It takes a while for the trade to develop, but then we get the follow-through. And I think that this pullback was just a bit more than 6 pips, but then we could have re-entered again here. So this particular breakout here basically ended up for break-even. But then we had another setup right here. And that one was a nice one, of course, going for a good run up. So basically what you see is price moves away from moving averages, goes back, and when it snaps above the next fractal, when you have also moved down to the zero line, and price has gone back to the impulsive band, that's where you're looking to try to enter. All the time, of course, when price is in the trending mode, above the blue band. Now sometimes you get a break, but then it doesn't go anywhere, and the second break goes. That's just because price is making kind of a correction. It's making a triangle, and you just took the first part of the triangle. So that can happen sometimes. Okay, so here too, break, break, trail stop, trail stop. Oh, this one actually would have exited here probably too. I'm talking about this one, this break, this break. Is it always that nice? No. This is a good trend on the odd USD to the upside. When price and you also see one thing, by the way, is the space between the momentum and the trending moving averages. When price is retracing back, obviously that's a retracement. When the moving averages are all intertwined, it's not interesting, okay, because it's ranging. Not interesting. We want space, basically, to the direction of the trend. So this could have been one. We're looking for a 3-pip break, by the way. Just a stop loss. That's just a couple of pips away from the fractal, and a 6-pip trailing stop. This would have been a loss. That sometimes you have with early turnovers. What I mean with turnover is we are in an uptrend, and price then starts to retrace, and this is the first time the impulsive moving averages dip below the long-term, the trend. And let me see if we broke this low by 3 pips. Well, actually, it's very close. Let me take a look. The low is 92.279, and the low here is, yeah, it's exactly actually 3.7 pips. So that was really unlucky. That's why I'm using 3 pips, because it avoids these smaller breaks of 1-2 pips. This one is just unlucky. What can you do? That happens. Not any strategy is perfect, of course. So that's what, if you want to do filter or optimize it, you might want to be careful with this whipsaw areas where price is just turning over. Here, 2 prices crossing. The first dip down and break. Got some volatility, maybe that's a news event. I think that was the Aussie news event. So that would have been I don't know, that would have been probably a loss, I guess, because of the volatility up and down here. Let's see. Otherwise, this is not interesting. Here we get a next break of the impulse. We're in a downtrend according to the band, the trend band. We are retracing back to the impulse band and breaking below the first fractal. So, but what we don't see here, or we do see a bit, is that it's a gap. It's a weakened gap, actually. I think, I don't know, it's some kind of gap. It's a bit strange. A safer stop loss, a bit more spacious stop loss. This is a tight one. The problem with the tight one is that you're going to have more losses. If you want to reduce the losses, but you'll be reducing the R2R, is you want to use 2 fractals back. Here the moving averages are intertwined, so this is not interesting. You'll be skipping that part. Already. Now the 50-minute world will have its choppiness. The hour world will have its more robustness. So if you want to have a bit more filter levels in it, you could even add one more. That's the 544. 544. That's basically, if you look at the 15, it's the 4-hour trend. And the advantage of that is that you would then, if the price is above the 4-hour trend, you would not take this one, for instance. And you would not take this to the downside, because this is trapped between the 1-hour and 4-hour trend. And this is not interesting therefore as well, because you can see it's all intertwined. Now the same could be valid for the hourly. It's a simple swing with the trend breakout trade. Let's see. Here we can see the first break of the top. Breakout trade to the upside. Here as well, by the way, breakout trade didn't go too far, but it does meet the criteria of space. This doesn't, because actually the momentum is gone back into the band, so this breakout wouldn't be qualifying. This one would just barely would, in fact. Tight one though. Let's see. This one would, right here. That's a perfect example where everything is aligned. Even this one could, actually right here. Let's see, maybe even this one. But you can see sometimes that you know, we want to, trail stop is good, but in some cases you're going to get a move up and down in this more corrective part, unfortunately. So the other examples do work nicely. Let's see. Here is an example. Everything is aligned. Break down. Okay, so maybe we can take a look at an example, a bit more detail. This is once again the hourly, so what we're looking at is hourly breaks. So we have the long term, sorry, the mid below the long, the impulse below the trend. And what we're looking for is then a retrace back to the impulse and a bounce and a break of the first fractal. So that would be below 89. Now with a 1 hour, I would change the trading stop from 6 to 15, by the way. And we enter here with a stop loss, a tight one, would be above the next, the previous fractal. A bit looser one would be 2 fractals away. Then we start trailing stopping it with the new fractals, 15 pips. Let me take a look where that would be. That would be here, which means we don't get taken out with this dip, this move up, and we can trail stop the next fractals. That's here, all the way here. It's a perfect trailing stop. 87.95 is our exit, right there, locking in some 500 pips, in fact. So that was a good breakout trade to the downside, and the trading stop worked well. Now you want to be careful with there's going to be bound to be moments where you have this, in fact, where you have a bigger retracement before you get another fall. That has to do with the edit wave theory. I know that sounds annoying maybe for some of you. I can't do anything about it. It just, price makes ABC corrections. It makes 3-ways corrections. And if you start trading the break of a B wave, then that's potentially going to be a loss. And if you enter here with your stop loss here, then that's going to be a loss. Now the good thing is, though, is that, let me take a look. You're also, for the initial stop loss, you're going to 15 pips above. So it's either at 88.40 or it's at 88.52 here. Wherever the stop loss is, though, is that we do use a trading stop, so at least you can reduce the risk to 88.30. It depends. You save 10 pips or 20. It's about a fourth or at least a half. Better than nothing. But that would have been a loss. If you don't recognize it as an ABC correction, then that is a loss. Now, I'm not saying that you must know edit wave, but in this case, if you do, and you would have used it, you could have filtered out a loss. Would have been an extra bonus, or at least part of a loss. The next break, though, this one doesn't count, right? Because the moving averages are intertwined. Would be here, although we didn't get back to the impulsive band. We didn't touch it, actually. Here, not either, so no. Sometimes I do work even if we don't touch it. This is all choppiness because price is within it, so that doesn't count. Here, this is an example of a breakout to the downside. Here as well. Here's a breakout. Sometimes you're going to have these long runs without actually retracement. That's going to happen sometimes. Here we did have a retracement, though. These are all reversal trades when price is going back to the moving averages. Well, here you can see a lot of upside examples. I'm actually looking for a spot where the market is not trending that much. Maybe here is an example. Well, this looks like a good zone. That's what I'm looking for because I think that you get the concept of a trending market. But let's take a look at when it's not trending because that's, of course, the danger with this strategy. Right, so I want to do more the opposite. Start looking for something that is not so good for the strategy. So when you look at this audio as the, let's see, price starts to get choppy here. This is going back to the moving averages, so it's retracement. When it starts to move away from the moving averages, it's a with the trend trade. So we can see here price goes back to the band. Then starts to break below it, and then starts to make a bigger retracement again. So here, for instance, with a tight stop loss, is going to be a loss. Let's take a look. Yeah, that would be a loss. The advantage of using a looser stop loss is that you don't take many full losses in levels like this. Because if you use a looser stop loss all the way here, you're going to be able to trail stop it here, and then you reduce your risk to about a quarter. If you use a tight one, you took a full loss. That's the disadvantage when you have choppiness like this. That would have been a loss. Let's see. This is all no trades. Here, no trades, because the impulse is still in the trend. No trades, no trades, no trades, no trades, no trades. So you see it does pretty well. It's a lot of choppiness, but all this is intertwined. There's really no trades at all. Only one here, which is not bad, in my opinion, if you consider uh, 340 bars, 18 days of choppiness. So it does a pretty good job. Now, finally, when we break away, this is actually a breakout trade. But however, before the band touches the impulse here, it takes a while. Only here do we get it, and then it gets a bit choppier. Anyhow, wouldn't be a loss. It would have been probably more like a break-even trade here. You do want to get careful, and that's when the oscillator gets useful, is when you get divergence like this and slowly crawling forward. You don't want to take the last one here, because then it's getting a bit of a retracement is probably possible. So divergence is something you want to maybe think about. Five and 15-minute chart. I think it's a useful concept. You might want to be a bit more cautious about using some extra filters maybe. That's the only thing. I think the concept still makes sense. It's just that maybe if you add a pivot point, it would be a bit better if you use it on the 5 and 15. So that you have a bit more idea about the intraday levels. On the hourly, you might want to be more aware of the daily levels, some daily support and resistance, for instance. Let's see. This is 5 Aussie. Let's see. You definitely see the rhythm here in play as well, where when price is really trending here, you can see just visually without really going into details. What you want to be careful of, I guess, is when price is really, when the impulse band is really like going flat, more or less, and is very close to the trend band, because then you get a lot of this like small spikes down, and you can almost put a trend line like this to connect the bottoms. Price just can't break that. Any breaks here is just, it's just that's not good. If you avoid those, then that is a great equity curve boost by avoiding these trades. Because if you avoid those will get some losses there. Preferably, you want to see some angle in it, in the impulse, not totally flat like this, or at least some space. Let's see. Same theory though. When you're trading back to the moving, when the price is going back to the moving averages, it is basically retracing or reversing. Here's maybe a good example. We have up, up. Everything is aligned to the upside. Price goes back. There is some space though, and you do get a breakout trade. Let me go a bit slower. Here too, still get a breakout trade to the upside. This is reversing. Here nothing is aligned, right? So that would be interesting. We're looking for alignment with the trend, preferably as an extra filter. Here you get a breakout trade. You can move the trail stop loss to gain some profit. Here you get another one. Let me zoom in there. trail stop it all the way up to here. Let's see. When you have a very small stop loss, let's say like this one on a 5-minute chart, then it is a bit risky to use like a stop loss right 7 pips away. Then in that regard, you might want to go more to this bottom here. Because this fractal is so close to the moving averages, that's a bit very close. Let's take a look at the difference. It's like within 3 pips. If it's really within 3 pips of the impulsive band, then you want to be careful. A bit looser stop loss would be better. And the trail stop would have gone here. This doesn't count because the impulse went back into the band. This is a good one because the space is big here. So what we're looking for is here's a break, for instance, and here's a break. The first one didn't go too far, but the second one didn't do too bad. Didn't go all too far. Well, you get the point. Let's see. So that's this part. I actually had one more planned, so I just went a bit more into detail than I wanted to. But let's see. We got only a few minutes left. Basically, here we're looking at a 3-band trend. This is doing the opposite. It's actually using a 1 moving average as the trend, but using a band as the short-term moving average. So that's the difference. I don't know if you see it. So basically what we're looking for here is what you can do with this is dips basically, you know, instead of waiting for breakouts, one could look for dips into this band. Okay, so that's the alternative. You could, obviously you can trade breaks of these fractals to the upside. But the idea would be that when price gets back, when you have them aligned like this, when price gets back into the band, that this could be kind of like a bouncing spot for upside. That's why the band is the short-term band. And with that in mind, you're basically looking for a bounce to the upside off of that band. Preferably, you have price actually going below the band and then above it again. Something like, let's take a look at this. Something like here and here. Here we go also. Here you get a sideways move. So if it takes that long, you know, you have to hang in there quite long, but then you do get the follow through. This too, a hook back. Now you don't have to necessarily take it right in the band. You can also wait for a engulfing twin, for instance, or the break of the fractal. But basically, when you get a move back to the band, it's a bit earlier entry. That's the whole idea. It's a riskier one, but it's the earlier one. Here too, go back to the band and bounce. Obviously, if this is going flat like this, or if they're intertwined, then you're going to have more troubles. Here too, if you break above and go back, a bounce in here didn't go anywhere, right? That can happen. But to be honest, if you use this as a stop loss, you want to use fractals, the previous bottom at least, as the stop loss. If you see fractals here, logically you're going to tighten up your stop loss to below there. So the loss is very small. So the difference is that you're looking for bounces in the band, whereas here you're looking for short-term you're looking for bounces in the short-term band, where here you're looking for the band, medium, let's say medium and long-term moving averages as your trend, and you're looking for the impulse, price to go back to the impulse and then break away from it. That's the difference. Any questions, maybe? I see we're running out of time, so maybe questions is appropriate. Some Q&A. Next week, of course, we have our usual webinars. Tarantula is going to have his Monday FX recap, as always. Then Tuesday, Wednesday, Thursday, we're going to have our trading room webinars. Wednesday, another webinar. In fact, let's take a look. Here it is. Wednesday, expert opinion. Let's see. Renko range bars part 2. And then next week, we will be looking at market structure. Live Trading Labs, we have multiple time frames, Fibonacci, and scaling in and scaling out. And there's a special premium webinar for live accounts, April 27th, ATR Stop Pro Indicator. Let's take a look at that. I think that looks like it's on a Sunday. Yes, it is. Take a look at our analytics, fundamental, technical, wave analysis, traders blog. Take a look at our Admiral Market spread. You can see here 0.3 at the moment, 0.9, 1.3, 0.8, 0.8, etc. A lot of valuable info here that you can find regarding education as well, Forex articles, trading examples, trading camp, and our webinars, of course. Well, no questions. I guess that's good. Everything is clear. Yes, Esteban, it's actually it's GMT time. And currently GMT time is 1 prior to UK time, because we have British summertime now, which is 1 hour ahead of GMT. So everything that you see here is actually 1 hour prior to London. So you have to add an hour to get London time. You have to add 2 hours to get Central European time. Yep, no problem. Because of the summertime, we had to shift back the GMT back 1 hour to get the same times as we always have. Well, T, I guess I don't see any questions, so I guess we can wrap it up.
Yeah, we can wrap it up. No questions so far, so everything is clear. Thank you, guys. Don't forget to follow us on Facebook, Twitter, and sign up for a free education. And we'll talk to you very, very soon. We will give you the knowledge, further knowledge of those strategies. Don't worry. Just be with us and follow us, and everything will be fine. You'll be safe, of course. Yeah, nice weekend. Be aware of tomorrow's NFP, so don't trade heavily. If you want, scalp a little bit, but don't trade heavily. NFP can be very unpredictable. Thank you guys for attending this webinar, and cheers.
Yep, cheers everyone. See you soon.